Welcome everyone to another episode of the series How to Trade with Less Than $5,000. These webinars again are designed for beginner traders, for aspiring traders who wish to learn how to become successful, how to trade like the pros, and most importantly, how to become consistently profitable. Okay, consistency is key. All right, so my name is Rony and Nehme. I'm Chief Market Analyst at SquaredFinancial. My team and I also run an education program for individuals who want to learn to trade Forex successfully. We also research the markets on a daily basis. We send daily market reports to SquaredFinancial clients. We help them with trade ideas and trading strategies. This is episode 2, Markets Explained. The first episode last week, for those of you who did not attend, I introduced myself. I spoke a little about my background, how I started trading over 19 years ago. And we also covered an introduction to Forex trading. We learned currency pairs, about currency pairs like the Euro USD. We also learned the spreads, okay? So the difference between the buy and sell, or the bid and ask, okay? That is called the spread, and how very, very extremely tight they are, especially at SquaredFinancial. And most importantly, we learned about leverage and how you can use it to your advantage by opening a real account and starting with a small amount of money, without risking a lot, to learn. Basically, your initial deposit can be anywhere from $1,000 to even $100. The money at this point is not important. Your goal is to prove to yourself that you can achieve consistent returns in percentage terms. Okay, so whatever the initial deposit is, once you prove that you can achieve that, and we're here to help, these webinars are designed to help you achieve that. And then you will top up your account and you will grow it from there. Okay, I was trying to show you last time how to open a demo account, but we didn't finish, so let's continue from there, shall we? Okay, so first of all, please go on the website. On our website is sc.squaredfinancial.com. Once you do that, you will get to the screen right here. Okay, so this is our website, your global investment gateway. You can here see the choices, the instruments that you can trade, the different types of instruments that you can trade, the account types that you can open. Okay, you can compare as well. And most importantly, you have here a learning section that you can click on. Squared Academy. There is a lot of video tutorials, very nicely designed, especially for beginners. So I highly recommend you that you look at those and educate yourself. Education is extremely important. Okay, guys, remember, this is a serious business opportunity. We're not talking about a game. We're not talking about a magic formula, some get-rich-quick scheme. This is nothing like that. Okay, so whatever you've been thinking or watching on the internet, we spoke about that last time. There's a lot of YouTubes out there that tell you how to turn $500 into $10,000 in 2 days, in 3 days. These things are, they don't exist. This is real business that takes a lot of hard work. So I highly encourage you to educate yourself before embarking on Forex trading. So basically, we're interested here in starting with a demo account, right? So you click here on try a free demo account. Once you're there, you will have to register your details. So your first name, your last name, the country where you're from, etc. Okay, I have registered already. So if I click on continue, of course, the email is, it will recognize this email as already registered. So, but if you register, or if you're already registered, just as myself, you can click here on the logo and it will immediately take you to the Squared Financial portal, to the client portal. And once you're there, you don't forget to open the demo, to download the trading platform as well. Once you download the trading platform, this is it. You will also get the user information to your email, right? The username and the password. So if it doesn't work, if it doesn't open immediately and the prices starts moving like they are now, you just go on file, log into trade account, and enter the information that you got to your email. Okay, the username right here, the password right here. Make sure it's Squared Financial Demo. Click Login. And here you go. This is the sound that you're connected. You can also see here that the status of the connection is live, okay? So these are the prices. You can see the different instruments. Euro USD, we spoke about that last time. Pound, the British pound, Great British Pound USD, USD JPY, which is Japanese yen, USD to Canadian dollar, USD to the Swiss franc. You click on each instrument, okay? And as soon as you click on the instrument, well, you don't click on it, you just slide the mouse over it, and the description of that instrument will appear, right? Okay, so oil, gold, silver, commodities, future stock indices like the S&P 500, the NASDAQ, the Dow Jones, so at 30 cash is the Dow Jones, the UK 100 cash is the FTSE, so the London Stocks Index, German stocks, Ethereum, Bitcoin, so cryptocurrencies as well, and a lot of many more instruments. Okay, so we won't go through all of them at this point. We just want to show you how to open a demo account, and please start playing around with that, like clicking. Remember what we discussed last time about if you have a small account, you can trade one lot. Standard lot is $100,000. Okay, so the 100, if you have in your account $500, this is the leverage here is 500 to 1. Okay, so for each dollar you have buying power, purchasing power of $500. That's what it means when it says leverage 1 to 500 or 500 to 1. Okay, so we cannot with a small amount of money trade one standard lot. So, but anyways, this is not important. What's important, as I said, is to prove to yourself that you can trade consistently, become consistently profitable. Sorry. So the volume here, if you put 0.01, we learned that this is a micro lot. So 1 is a standard lot of 100, right? 0.10 is a mini lot, so that's 10,000, and 0.01 is a micro lot, so that's $1,000. Okay, so with only $100, yes, you can trade 0.01. Okay, so you can trade that without a lot of risk. Okay, so you can of course choose between market execution or pending order. So you choose which price you want to buy or sell at. Let's go along, just play around for now, okay? And if you view the video tutorials on our website, you will also learn what the differences are between pending order or limit order and market orders, okay? We're not going to go through these during these webinars, these episodes. We will just go through some trading psychology, the next episode. Now, this episode, we will go through a small presentation. Let's start it right away. Markets explained, okay?
Okay, so first of all, markets explained. We're going to talk about investing versus trading, the big difference between a passive investor and an active trader. Okay, what are the differences in terms of strategies, but also in terms of benefits? Okay, what are also the different asset classes that are traded? Stocks, futures, and Forex. Most importantly, Forex, because this is what we're going to focus on. This is what all these webinars, the episodes within this webinar series, we're focusing on Forex, so buying and selling spot effects, okay, and buying on margin. Finally, buying on margin and the benefits of that. Okay, so let's start investing versus trading. Investing is typically for long-term traders. So traders who are typically looking to invest for the long run, usually for retirement, until retirement. Okay, and they build a diversified portfolio of many asset classes, including stocks, maybe bonds, maybe commodities, maybe also FX that they use for hedging. Okay, they sometimes use the assistance of a financial planner. So if it's in case of a retail trader who doesn't have enough experience or knowledge, or he doesn't have the time to trade their own account or to self-direct their own investment account, they usually seek the assistance of a financial planner, certified financial planner, who has the experience and the know-how and the advice that will benefit investors. Okay, as I said, it's usually buy and hold strategies and not versus active trading strategies that traders use. Zero or minimal leverage. Okay, so an investor would usually typically not use any margin, any leverage, or maybe a little bit of leverage, maybe 2-to-1, maybe 3-to-1, or maximum 4-to-1, because this is the maximum allowed by certain regulators in exchanges. And typically the annual return objective for an investor is 5%, maybe 6%. Okay, so a little bit in that range, rarely double digits, so rarely 10%. The annual return objective, of course, some years are going to be better than others. So some years you're going to have maybe 10%, 9%, but on average, on the long run, unless you're taking much more risk, so let's say 4-to-1 leverage with high risk stocks or instruments that have, much higher risk than what are called blue chips. For example, in stocks, we call blue chips the companies that are very well known, such as Coca-Cola, Amazon, Walmart, Renault. Okay, so these companies, these very well-known companies, are called blue chips and are usually used by investors or added to an investor's portfolio in order to perform within certain risk parameters, so without taking too much risk. Okay, so the annual return objective, as I said, is usually 5 to 6%, whereas traders typically use trading either as their primary job, because there's a lot of traders out there who work not only for banks and financial institutions, but also on their own. So they trade their own accounts and they self-direct. We call them self-directed accounts. So because they are trading their own accounts, or sometimes using artificial intelligence, such as robots, expert advisors, and they will monitor these robots. And typically they use, of course, as I said, primary job or maybe an additional income, but they are typically actively trading versus passive. Okay, so much more aggressive, multiple trades, maybe not only buy and sell, but also short sell. Okay, so if for those who don't know what short sell is, please research it and educate yourself. But just a simple definition, short selling is when you want to benefit from a dropping market. So in comparison to a long, okay, or an increasing market, increasing in prices. So you buy low, you sell high, you take advantage of the increase in price, or you can also sell high and buy low at a later date and benefit from a drop in prices. Okay, that's short selling. The leverage used for traders is at least 30-to-1. So $1,000 would give you a buying power of $30,000. Sometimes, even depending on experience and knowledge, some traders use a 500-to-1 leverage, which is huge, enormous. Okay, and obviously the returns, the annual returns that are sought by these traders are 25% plus. Okay, the risk is much higher. Why? Because we're using the margins. Okay, and I'll explain why these margins are, of course, what makes a trader successful, but is also what makes the trading very high risk. So we have to use proper risk management in order to use margin levels, high margin levels. Even 30-to-1 is considered the high margin level and should be used with caution and with proper risk management. Okay, so let's talk a little bit about stocks. Of course, everybody knows what stocks are. you're buying shares or ownership in a company that is listed on a stock exchange, such as the New York Stock Exchange, Nasdaq, London Stock Exchange, Euronext for Europe, and Tokyo, or other stock exchanges all over the world. So you buy companies, as I said, such as Google, McDonald's, Facebook, Twitter, Amazon, Samsung, Apple, MasterCard, Coca-Cola, all kinds of, the very well-known companies, and you benefit from an increase in price or a drop in price if you're short selling. Now, on our platform, we don't have stocks yet. It's at Squared Financial. However, we're going to add soon on our platform the option to trade stocks in the form of CFDs, contract for difference. Okay, so you'll be basically able to buy and sell stocks in the future, and you will benefit from growth in earnings, as I said, because these are the typical traders that usually buy or sell stocks are, for increases in prices. Usually prices increase in such companies because of growth in earnings. So it's called capital gain. When we buy and sell at a higher price, the profit is called capital gain. And also we can benefit from fixed income because some companies distribute their earnings or distribute their profits in the form of dividends. Okay, for example, a company like McDonald's will distribute quarterly dividends, and the investor or the trader would take advantage of that. That will be considered a profit as well. Okay, let's talk about futures. Future contracts are agreements used to hedge against the volatility of commodities prices. Commodities prices such as coffee, oil, gold, soya beans, wheat, corn. Okay, so these are the types of commodities that we can also trade in the form of futures contract. For example, an airline company uses futures to buy a fixed amount of fuel for a fixed price at a fixed period of time. Okay, so they hedge against the fluctuation in price of oil, okay, because otherwise they can't increase their ticket prices every time oil prices go up and decrease their ticket prices every time oil prices go down. So they have to have a fixed price, and so they buy future contracts to hedge against this volatility or this fluctuation in prices. Traders and investors also buy and sell future contracts as a way to make money. So not to hedge against fluctuation in prices, but to speculate on the increase and decrease in prices. We can also trade futures, currency futures. Okay, so currencies not only are traded as on the spot FX market, but are also traded on a physical marketplace called the futures exchange, such as the Chicago Mercantile Exchange or the ICE Futures Europe. And another example I wrote here on this slide is a corn flakes company using futures to buy a fixed amount of corn for a fixed price at a fixed period of time. So also to hedge against fluctuations in the prices of corn. So that's just to explain to you the different instruments before we get to the of webinars, which is Forex. Okay, Forex, off exchange market, also known as an over-the-counter OTC market. Why? Because it's not a market in the traditional sense. There is no central trading location such as the New York Stock Exchange or the Chicago Mercantile Exchange or the London Stock Exchange. So the stock markets and the futures markets usually are centralized markets, whereas the Forex market is a decentralized market. It's an OTC market, okay, where different counterparties are connected together, and it's not one physical or one marketplace. So it's mostly the trading is conducted mostly through electronic trading networks. Okay, I won't go through how it works because also, as I said, all this information is available on the internet. There are interbanks that are connected together. These are the banks that price Okay, so they quote, so they will quote the prices of currency pairs. And also you can trade on a Forex market. Also, when we talk about Forex, we also include futures, however, traded as cash instruments. For example, gold. Instead of trading gold futures, you can also trade cash gold or spot gold, and the symbol would be XAUUST. Okay, and the difference would be is on futures, because futures is a contract, you will have an expiration date, whereas in this case, on the Forex market, you don't have an expiration date, and you can hold them indefinitely, so for an indefinite amount of time. Okay. Also, oil has U.S. oil has an instrument, CFDs, if you want, that are traded as cash compared to futures. And as I said, also currency futures, of course, you can trade them on the spot market or on the Forex market as well. Okay, so we have spot FX, currency futures, energy futures such as oil, natural gas, and all that, precious metals such as gold and oil, and also stock indices such as the Dow Jones or the DAX, the German DAX, or the FTSE or the S&P 500. All these are indices, right? So they are stock indices. An index is composed of many stocks. For example, I'll give you an example. For example, I'm sure all of you have heard of the Dow Jones. The Dow Jones is 30 biggest American companies listed in American exchanges constitute the Dow Jones. Okay. S&P 500 is the 500 biggest US companies. The FTSE 100 is the 100 biggest UK companies, etc. Okay, so you can trade also stock indices. Okay, let's talk about spot FX a little bit. If you buy Euro USD on the spot market, you are trading a contract that specifies that you will receive a specific amount of euros in exchange for US dollars at an agreed upon price, also called FX rate. Okay, so we're buying a contract on the spot market, okay, that specifies that you will receive a specific amount of euros in exchange for US dollars at an agreed upon price, but does not have an expiry. This contract does not have, actually, it does have an expiry. However, there's something called rollover that we will talk about in the next paragraph here. Although a spot Forex contract normally requires delivery of currency within 2 days. So normally you are required to, if in case you're selling, to deliver, and in case you're buying, to take delivery of currency within 2 days, so T+2. But nobody takes delivery of any currency in Forex trading. The position is instead rolled forward by your broker every 2 days on the delivery dates. Okay, so that's why you will notice that you have fees that are called rollover fee or swap fees that are added every couple of days to your positions if you don't close them. So let's say you open a position Euro USD and you don't close it for a week or two or a month, you will see these small fees that are added to your position, or credits as well. You can depending on if you bought or you sold, right? So if you buy the Euro USD or you sell the Euro USD, you can also take these swap fees. So depending if you're a buyer or seller. And finally, buying on margin, which is, in my opinion, the biggest advantage in Forex trading. It's also it's a dangerous tool, yes, for those who do not know what they're doing. That's why I highly recommend that you open a demo account to understand how things work, and you research and educate yourself on margin trading, because margin trading is only for experienced traders. Okay, and requires a lot of experience in order for you to start knowing how to use it. So you can open a margin account without using your margin. You don't have to use your margin when you start. But why it's the biggest advantage, because you can basically open an account and put a small amount of money in it, but trade as if there is much more money in your account. So an example, you can trade one standard lot of USD JPY without margin. You will need $100,000 in your account, but with a margin of just 1%, you would only have to deposit $1,000 in your account. So the leverage provided in this case for this trade would be 100 to 1. Remember, 30 to 1, 40 to 1, 50 to 1, up to 500 to 1. Okay, so let's say if the leverage provided for if the margin is 30 to 1, right? So what would you need if you want to buy $100,000 in your standard lot of USD JPY, Japanese yen, USD Japanese yen, which costs $100,000 at a margin level of 30 to 1, you would need much less than that, right? And if you have leverage of 100 to 1, you would need to deposit only $1,000. So that's the biggest advantage in Forex trading, and that's what again makes an objective such as 25%, even 50%, or even higher annual returns or return on your initial investment possible. Okay, so we will talk about this much further in future webinars, because very, very important to understand how it works and understand the power of the leverage, the power behind trading using leverage or trading on a margin account. Okay, and thank you so much for your attendance. We will take it slowly, but I recommend that we saw how you can open a demo account. I recommend that you go ahead and open a demo account, start trading, so that by next session next week we will be able to start actually showing you how to trade. Okay, the next episodes as well, we're going to talk about the right mindset that you should have in order to trade, and then we will start going through the fun stuff, which are trade ideas, trading strategies, how to make money trading. Thank you guys for your attendance. If you have any questions, go ahead. Please feel free to now start asking them, and I'll respond on the chat section on the right side column. Thank you very much.